Welcome to the Rent Roll Queen podcast. I am your host, Tarsi Taylor, and today's episode is sponsored by Reebok, the Real Estate Business Owners Conference. Trust account audits suck, but they have to be done. Today, I chat with Betsy Hetherington of Hall Chadwich Queensland, all about trust account auditing. Welcome to the show, Betsy.
Thank you.
Oh, it's great to have you on. Can you please introduce yourself?
Okay, well, my name is Betsy Hetherington. I work with a firm called Hall Chadwich Queensland. As you can tell from my accent, I'm not local. I'm from Ireland. I came here 16 years ago. I had a job in Hall Chadwich before I came, so I've been there a very long time, doing trust account audits for probably 14 years of that time. So we're pretty well acquainted with
and you would have seen so many things in this space.
We get to see some interesting things for sure.
I'm so excited about having you on the show today because trust accounting is something that real estate agents have to have as part of their operations in property management and sales.
Yeah.
And I know that you have some great stories for us. So let's start with, with trust accounts. Is the legislation, because we're obviously in Brisbane at the moment doing the show, but is the legislation the same for the whole of Australia, or do they each have their individual?
No, each state has their own legislation. So the main legislation for Queensland is the Agents Financial Administration Act.
Yeah, that's the one.
That's the one. Which came out in 2014. Though I can't remember what its predecessor was called, but they made changes to it in 2014. And so that's the main legislation that we audit under
in Queensland.
And it's very detailed.
What's the difference between the states and their auditing requirements?
One of the main differences we find is the timing. So Queensland's probably the most legislative. I've experience of 3 other states. Queensland is the most legislated because it requires 3 audit visits a year, or examinations, we'd say, rather than visits. So 3 times a year we have to examine our clients' records, which is very onerous for small businesses.
Yes.
For the larger ones, it's great to get those 3 visits because it means that you're not doing a massive chunk of work at one time. You can spread it over the year, and you can spread the cost of it over the year for the client.
Yeah.
But with some small clients, we had one client, I reviewed their file yesterday, they had 10 receipts for the year. They're in the sales space, so it's might be only 10 receipts, but it's high volume in terms of dollars. But to have to go and visit them 3 times a year is onerous, and we have to examine the records. So I can see the need for it in some ways, but it would be nice to have a kind of a tiered system in place. Depending maybe on the size of the entity and the number of receipts they issue, maybe, or something like that. But I don't foresee that happening with the OFT at the moment.
No, that's all right. Well, look, we just got to roll with it, right? Because that's just part of being in real estate and owning a business. So it's really important to have your trust account audited.
Oh, absolutely.
But with trust account auditing, how can real estate business owners be more prepared for their audits? And what should they be doing while running their business, basically, to make it easier?
It's a difficult kind of space because when you go into a business, your focus is primarily, obviously, to make money and give good service to your clients or your customers or whatever business you're in. The accounting and bookkeeping side of it often comes secondary to that. And we understand that because, obviously, you have to live, so you have to make money. And in other businesses, you can kind of get away with that a little bit.
Yeah.
When it comes to having to run a trust account, which 99.9% of real estate agents, I would imagine, have to. I don't know what the 0.1%, why they wouldn't. Maybe they run funds through their solicitor or something. I don't know. But when you're in that space, it's so regulated. Now, when you read the acts and regulations, and they're quite easy to read, people think they're not, but they are. The information is all there as to what you need to be showing in your records.
Yeah.
Plus, all the softwares, they're also set up by people who understand this legislation. So most of them, if you put the correct information in, will spit the correct information out for you. But you also have to remember the timing around doing your end of month reconciliations because they have to be done within a certain time frame. So that's the stuff people need to be aware of. But often they're not because they need to get the business up and running.
Yeah.
Or they'll take on a bookkeeper, and most bookkeepers are very, very good. But bookkeeping for trust accounting, as you know, is a whole different level of
It
bookkeeping
is,
because
yep.
of the requirements and the compliance. So any audits we do, I thankfully, in all the years I've been doing it, have never come across a fraud. I've never unearthed a fraud because apart from the financial fallout of that, the personal fallout of that for people is very difficult.
Yeah.
It's very emotional. But in that space, the issues we always find are in the compliance, because people are always happy to go, we've received the money, we've got the money, we've paid it out appropriately, which is great. But anything we ever find that we have to report to the Office of Fair Trading is always compliance based, because people are not as aware of the compliance.
So what's the compliance that they're missing? Like, what are they doing?
It varies from client to client, and again, it's one of those things that it might be just a small thing, and if it's a small thing, we'll kind of go okay. But if it's a small thing done repeatedly, we then have to report it.
Is that like the timing of when they do a disbursement, or
it could be even basic things like dates on receipts. You know,
Yeah,
how
right.
you date them, the information you put on your receipt, is everything there? If you're renting a property, is the date up to which the rent is paid noted on the receipt? Because it has to be. The form of the monies, the name of the person receipting the monies. It's just so detailed, and sometimes those things get missed.
How does that happen now that we've got software that basically is supposed to do this part for us?
Because it goes back to the old garbage in, garbage out. If you whatever
Yeah,
you put in is what
right.
you get out. So
Yeah.
if you don't put the correct information in, it's not going to give you the correct information back out again. And sometimes people make mistakes and they have to reverse their receipt and reissue it, and that's fine. There's nothing wrong with that. Unfortunately, people try to do things like delete receipts. And you go, don't ever delete a receipt, because then you're looking at a gap and we don't know what was there. So for an audit
right.
trail, just reverse and reissue. Unfortunately, a lot of software providers, people go to software providers for their, if they have an issue, they'll go to the software provider and go, how do I fix this? And the software provider will go, oh, just delete it and start again. We're like, no, we don't ever
delete.
don't ever delete. So again, auditors are not supposed to advise. We like to assist our clients. So I say to all my clients, just if you have anything that you're struggling to figure out how to fix, call one of our team. You know, call someone you're familiar with, and that, you know, we're all well versed in how to deal with this stuff.
Yeah.
And we will discuss it on how the best way to
speak to your A team, basically.
Yeah,
like, you're part of the A team.
Yeah, your auditors are like, and some auditors will have the attitude of, oh, you're not supposed to help your clients. Well, we're all human, you know, and like, we can't give advice and we won't give advice, but we will point you in the right direction as to who to talk to or where in the legislation. So when we do an audit, for example, the 3 that we do a year, we'll always issue a management letter.
Yeah.
First, whatever we find. So if we find there's an issue, say the wrong agent number is on the receipt, because that's actually something that can happen regularly, because people have a business, a corporate license number, and then they have their own personal license number. And they think because they're the person in charge, their license number needs to be on there. And because they want to have ownership of it and they want to have accountability. So they put, well, I'm the accountable person here, I'll put my number there.
Yeah.
But it really has to be
the corporation. Oh my gosh, I see that all the time when I go into offices and I'm doing due diligence, right? And I look at the forms and they've got the wrong, wrong person, wrong number in the license. And I'm always like, well, you got to remember, first and foremost, this is about money in and out of a trust account. This is saying what fees and everything you can charge. It's all about money. And the corporation license is actually what is the licensee of your trust account, right? And then I also direct them back to the form, and I'm like, it physically says it here. All you have to do is actually read the form, like, of what license needs to be put on.
Yeah. Because also it's the license number that your trust bank account is linked to.
Yes.
Because your trust bank account is linked to your license. So that's the most important thing. So that's something that we see on a regular basis.
So what do you suggest that business owners do then to try and ensure that those little issues don't happen?
So when we complete a trust account audit, we will always send a management letter. So if, for example, they're using the wrong license number, we will put in their management letter, this is what we have seen, and our recommendation is please refer to the legislation, blah, 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 blah. We will always bring it back to legislation because we don't make stuff up.
Yes.
So the legislation states this. We recommend you have a look at this or whatever. It's not advice. It's more, this is what we found. This is what the legislation states. So this is what you should be doing. And it might be sometimes that it's something they can't change, or with the way their business runs, it's difficult. we will always make a recommendation, but we're not insisting.
Yeah, you can
So
lead
the
a horse
client-
to water. You can't make them drink it.
Because
Yeah.
clients will come back to me and go, you told us to do this. And I'm like, no, we told you what the legislation says you should be doing,
Yes.
which is not quite the same thing. Whether you decide to do that or not is up to you. But if you don't, it'll be on our report to the Office of Fair Trading. And that's then when you have to start dealing with them.
Right.
But we're not forcing anybody to do anything. We just make the recommendations, and be aware of the legislation and what it states.
Yeah, so, realistically, business owners really need to understand that legislation. I know that they don't put a lot of time into reading it, but it is worth a read just to sort of know, or to go, okay, I need to know these sorts of things. Trust accounting is really important.
Yeah.
Because it doesn't only protect the business, it also protects their clients' money that goes in and out.
Yeah.
Actually, can we talk about that? Because there are some people that don't run a trust account, or there's software out there that is trust accountless. So,
Really?
yeah. And my understanding was that you had to have a trust account.
If you're handling client monies, you have to have a trust account. I can't think of a scenario where, say, someone doing property management wouldn't handle trust monies. In a sales scenario, if they only do sales, that's possible because the solicitor could maybe be holding the deposits or whatever. But in a property management scenario, I can't think of a situation where you would not need a trust account. But I have heard there are people who operate without trust accounts.
So what happens there then?
Well, again, it's up to, I suppose, people to report that to the Office of Fair Trading, because the Office of Fair Trading are only aware of what they're told. So when you open your trust account, you have to obviously send in, I think it's the Form 5 to the Office of Fair Trading, and you have to appoint your auditor within so many days. And then it's like, so they're aware of that trust account, and also be aware that they can see movement on that trust account.
Yeah,
so if you have a trust account open and you don't use it, which often happens for newer businesses, you don't have to have an audit done. You can just send the Office of Fair Trading a statutory declaration saying we have had no movements, but they have software that can see if there's movement on that account.
Right.
So if, for example, something was lodged by mistake and you refunded it, don't send them a stat deck saying there's no movement, because there was. You can send them a stat deck and a copy of the bank statement and go, look, we had no trust monies come in. This is what happened. Here's the statement so you can see.
Yeah, right.
But yeah, I have heard there are people out there with no trust bank
so
accounts.
with the trust account, right?
Scary.
So then let's get a real clear understanding. Like you said, you have to have it for clients' money because you're holding money, right? Yeah. What happens in the scenario if, say, a trust account got hacked? What is the protection for the client? Why is it so important to have a trust account? Because there is a reason why you've got to have it, and it's protected.
Yeah, because it's not your money.
Yeah.
So you can't mix that money with your business money. And it's not just real estate agents, solicitors, accountants. There's lots of people that run trust accounts. If you're holding money for somebody, you can't mix it in with your own money.
Yeah.
And there's rules about when you can take your portion of that money even. So with real estate agents, you can't pay yourself until you pay the owner.
Yes, right.
So, there are people who collect money throughout the month for an owner, and they might take some money for themselves mid-month, but they only pay the owner at the end of the month. That's not allowed.
Yeah, right.
There is a structure of how you make payments. You pay whatever bills are owed that you're authorized to pay. You pay the owner, you pay yourself. And that's the order. You're the last person to get paid. So, yeah, it ring fences the client's monies. That's it. So you can't touch it. You can't use it to pay your bills. It doesn't get mixed up with everything else. So that money is always there. You always have a list of who it belongs to. Because you always have your trial balance at the end, and it belongs to all these people. So you know at any given time who's owed what.
Yes.
And who owns that money. And it's really important, especially if you're running a big rent roll. Like, can you imagine trying to keep control of that within your own monies?
You can't do it. No,
you really couldn't. So it does. It's there for consumer protection at the end of the day.
Yes.
So how anyone can not run one is just, how do you prove what you owe to anybody?
Yeah.
Why would you put yourself under that stress?
Well, I have seen where, they have got a trust account and they have touched the money within that trust account as well. And then all of a sudden, they're in trouble by the Office of Fair Trading, and they have to pay back not only just what's in the trust account that they've taken, but they're also fined.
Yeah, I would assume so, yeah. I've never come across a scenario, thankfully, so
yeah.
I would assume so. I've come across scenarios where people have dispersed monies by mistake, and then they have to bring it back again and stuff like that.
Yeah.
That happens with human error. That's just part of life. But as soon as you're aware of it, you got to fix it. You know?
Yeah. And the fees that the Office of Fair, like the penalties,
They can be big.
They can be humongous.
Yeah. And that's, again, that can happen from it. There's normally a scale. You'll get a warning, then you'll get a bigger warning, and then you get a fine. You know, they have that.
Right.
But it depends on what you've done.
Yeah,
so, like,
right.
There have been scenarios where people have been not realizing they're operating under a wrong license. So there could be people who have an individual license, but they've set their bank account up in a company name, but they don't have a corporate license. So this corporate bank account is linked to their personal trust, their personal license, which they thought was correct.
Yeah.
They weren't trying to do anything wrong. They just got bad advice.
Yes.
And they ended up being fined by the OFT because that was a big no-no, you know. So again, there's levels.
Yeah, and obviously the fines get bigger and bigger.
Yeah.
How does that impact their license?
I would imagine if it's ongoing and serious enough that the OFT would take their license. Again, I've never thankfully come across that scenario, but I would imagine that's the whole point of the OFT would be that they're the watchdogs on this, you know.
Yeah.
So it's up to them to decide. But I would imagine it would be a very long process before they would take anyone's license often, because it is someone's livelihood and all the rest of it.
Yeah.
But if you have someone who's deliberately doing wrong, that's not okay.
No, it's not. It's not.
They should be pretty much license taken away.
Yeah.
Straight up. But again, how do you prove that? You know, it's like you can't just have a gut feeling about it and take the license. You have to prove that it is deliberate and ongoing.
And they've been doing this for quite a significant amount of time. And this is where, you know, and there is businesses where they've ended up in receivership because they've done the wrong thing through the OFT and they've been penalised and they've taken significant money out of the trust account and all of a sudden they lose their whole business.
Yeah, and they think they can repay it, you know?
Yeah.
I used to have, ducking away from real estates for a moment, we also obviously audit solicitors' trust accounts. And there was a guy, he was the top guy in the QLS. I won't mention names, but he used to do a talk every year, and we as auditors would go, and people who run the trust accounts, and he used to say, yeah, people think they can take money out of the trust account and go and invest it in the casino and then bring it back. You know, it's like, and then they just didn't make any returns to the casino, so then they're in a world of pain. And I was like, and that they're the things that it's easily accessible money that if you're in trouble,
it's like, oh my gosh, I want to touch it, but just don't touch it.
Just don't touch it, because you can see where that people just get in strife. You know, they really do. It's not okay. And not even I don't even mean from a gambling perspective. I'm just like anything. A lady whose son was in financial trouble and she ran the trust account for this particular firm. Again, it was a solicitor scenario, and she thought, I'll just lend this to him and we'll put it back. And this lady who'd done the right thing all her life got just caught up in an emotional moment when funds were just there for that she had access to it. It's very sad, some very sad stories, but you just don't go down that path. It's not a good path to go down.
And that's the thing, you know, have conversations with your A team. Like your accountant's there to help you with, you know, the financial side of things in your business as well. So have those conversations because they might be able to point you in the right direction. But the rule is, do not touch your trust account.
Trust the trust
That
account.
is there to protect your clients and then for you to collect your fees as the last person involved in that transaction.
Yeah, not your money until everything else is paid. You
so
know?
what can they do? Like what can business owners do to better prepare for a trust account audit? Because it can be a stressful time when it's like, oh my God, I got to get my trust account audited.
People get really stressed. I think we're really nice people. We're nice people. Most of us are. Look, it's if you have your records in place and you're aware of what you need to do from a compliance perspective, there should be no issue. You know, and with a lot of it being online now too, like a lot of the big softwares are online now. So we actually do a lot of work from our office. Yeah. And then we'll go out on site with the client and go, right, can we see this? Can we see that? You know, I like to go out on site, or we as a team like to go out on site, because it gives you a sense of who you're dealing with as well. Yes. And you read a lot and you hear a lot. For any audit, you hear a lot when you're in someone's building and around their employees, and you get a gauge of any risky goings on. But again, as I say, thankfully for our trust accounts, we never have. So we can do a lot by just having access to the software if the client is comfortable to give us read-only access.
Yeah.
So we can pull out a lot of reports and invoices and everything. Software has come such a long way, even in the last 10 years, where you can save all the invoices there, you save all the emails, and we can just drill into it, grab what we need. You don't even have to bother the client a lot of the time if everything's saved in there. So unless something doesn't match up, then we have to obviously have a conversation.
Yes.
And it will always be a conversation. We'll always make sure we understand fully what we're dealing with, or anything we need to report to the OFT. We will always try and go like, this happened, but they did this to fix it. Or they're trying to fix it, or something has happened. You know, so it's very, we try to work as a team with them. We're not working against them. Like, we are reporting to the Office of Fair Trading at the end of the day. So that's where our obligation is. But we want to work with the client for that as well.
That's right.
And that's what your auditor should be doing. Should be working with you, not against you. And again, some auditors would say, no, you're there to just report everything you see. And I'm like, we're human, you know, auditors are human too, you know, like we really are. So, and people they try to do their best.
Well, the majority, that's the thing, the majority do their absolute best. It's the minority that ruin it for everybody, but the majority actually are there to do great business.
And it's hard to navigate sometimes, you know, it really is. It's a lot to navigate. But you know, it's, as you say, in any realm, it's the people who don't do the right thing make it difficult for everybody else, because legislation has to be put in place to regulate them.
Yes.
But we all have to abide by it.
Yeah. And unfortunately, you know, the ones that do the wrong thing by touching the trust account and doing trust account fraud, they're the ones you see in the media.
Yeah.
It's not the great real estate agents who are doing absolutely amazing and their audits are absolutely perfect and they've never been fined in 50 years.
Yeah.
It's just the one person that did the wrong thing, and then all of a sudden it gives us a bad rap in our industry.
Everybody.
It does.
Yeah, it's really unfair, but it's the way we always are. We like to hear a bad story rather than a good one, you know, which is unfortunate. But yeah, I look at, as I said, like every client I have that we have at Hall Chadwich, they're all amazing, you know. So we work well with them, and they appreciate what we do for them, and we appreciate that they keep their records well, so it makes our job easier, you know.
Yeah.
So.
Oh, I've got a question for you. So what about when somebody's bought a rent roll and tagged it onto their current business? Like, what information do they need to give you, or is there any information that they need to give you? Because obviously you've seen it from one moment, and then in the next audit, all of a sudden they've got, you know, another 100 or 200 properties tacked on. Like, how does that work?
We tend to just roll that in with the new rent roll. The bigger side of that is where they sell a rent roll. So we have a client who sells their rent roll. Then they need to be notifying owners and tenants and making sure that funds are properly kept. And technically they're supposed to get an audit before they sell it. So we have to audit it before it goes. Yeah, which is quite difficult because we often don't know about it till after the fact. And you go to the audit and go, oh, by the way, we sold the rent roll 6 weeks ago. Okay, we were supposed to audit those funds before you handed them over.
Yeah, right.
But again, that sometimes doesn't happen.
Yeah.
If someone buys a rent roll, we just check from that point in time. Because it can be tricky, the whole handover, because especially tenants, you inform them 5 times that we're changing bank accounts. You need to now change your payments to this bank account. People don't read stuff sometimes.
They don't.
So you're still getting all this money into your trust bank account that you then have to either send back to them or get permission to send it on to the new property manager. Yeah. So, because it all has to be about authority to deal with those monies, because they're not your money. And it all has to be in writing, because remember, verbal could basically mean it hasn't happened. Yeah. And that's the thing, right? You've got 2 businesses now, one's sold, one's bought, and you're running 2 different trust accounts side by side to make sure that the money goes across correctly. Yeah. So you just have to be aware. And again, people think they have to issue all new Form 6s and stuff like that. You don't. If you buy a rent roll,
so long as they're correctly completed in the first place. Yes.
And they're in the name of the company that you bought them from, you're okay with that. Again, it's probably something that over time I would change them into my name over time once everything settles down.
With that. Yeah.
But immediately you don't have to. Yeah. You don't have to do that.
Because what you're also seeing is like one business has bought another. So business A buys business B. Business A now has business B and business A's rent roll. Business A goes to sell to business C and has 2 different forms.
Yeah, 2 different names. Yeah. So it just gets complicated.
It does.
But again, if you're buying like 300 property managements and there's 300 owners, it's a big task. But again, it's something you just do over time.
And you just break it down into slow chunks to do it.
And people design stuff sometimes.
I know that feeling. It's horrible. And that's what I say to business owners, I understand it can be very difficult to do, but once it's actually done, it's done, right? But you've just got to break it down into little chunks. Yeah. Don't try and do 300 properties in one day. It's just not going to work.
Yeah.
Whereas if you actually break it down slowly into having a conversation, letting them know that it's being sent, send the email, send it across in DocuSign, follow it up, and then you get that 10, you start with the next. It's you just got to break it down.
And even if you only get 9 back, it means there's only 1 then in the old name.
Yeah.
You're left with a small bunch that are in that old name, and then but the majority are in your company name, and it just makes life easier for everybody. But we do have it's not a fun thing to navigate, that one, but yeah.
Well, we'll try and make your job a little bit easier. So
thanks.
Everyone listening, just go get those forms and make sure they're in your company name. Slowly over time, doesn't have to be done tomorrow.
Yeah. But I like, from our perspective, we don't mind what name they're in as long as we know you own them, but for your own sake, when you go to sell again, as you say, you have 2 sets of forms now in 2 different names that are then going to go to another entity. So it'll be 3 lots of names. It's just easier.
Yeah, it gets even more and more complicated as they continue to sell. And
another big thing is if you change your commissions, please have some evidence, because you don't have to reissue the Form 6.
Great.
And this is one thing that we come across regularly, is where we obviously will look at commissions and test commissions as part of our audit procedures. But the Form 6 might say 5% plus GST, but they're charging 6% plus GST. And we're like, well, you're overcharging. What is it? So always document when you agree with your owner. You don't have to give them a new Form 6, but keep the emails. Keep evidence that you have agreed with them to charge them.
And for goodness sakes, please attach it to somewhere where when I'm coming in for a due diligence, I can find it, because I can't then find it. And it looks really bad on your due diligence report for your buyer or seller. So,
whereas I just go, can you just give it to me? I'm not going looking for it.
Yeah.
It's not, as auditors, it's up to them to give us this documentation. We don't have to go rifling through filing cabinets like we used to back in the old days. So anything like that, please keep evidence of it, because it's just for your own sake. If you only have a Form 6 that says 5%, you're charging 6 and you can't show us an agreement, well then we're reporting to the OFT that you're overcharging your owner.
And you got to pay back that money. It's really important.
So it's just that's probably one of the biggest things, is keeping those things aligned.
And I do like the fact that, with the Form 6, you don't have to get a brand, like you've just said, you don't have to get a brand new agreement. But if I'm still going to go with best practice, right? Make sure you send out a document through DocuSign, get them to agree with it with a signature, and then pop it into the file with, an extra 2, updated commission rates as signed by client, in the file, so we can actually find it. And you've got record of it too, because the amount of offices that I've walked into, and you would be the same, they have no record or notes that it's actually been increased or decreased and why it's actually occurred.
Yeah.
So even the business owner, they're like, oh no, I should be charging it at the same of, or more or whatever. And it's like, well, how do you know? Where's the proof of anything? Gives everyone peace of mind. But it was in the old legislation, you had to get all new forms if you wanted to increase the commission rate, and it was just insane.
Yeah. The old forms were the Form 20s, were Form 20, 20A or something. I remember actually going through those, because they used to split the commission out from the property management fees.
Yeah.
But the commission was plus GST, but the property management was including GST, and it was so confusing for everybody.
But they're still getting it wrong now. Oh, yeah. They're still getting it wrong now. They're still trying to break it out into 2 different parts instead of having it as one. They're still not reading the document which says includes GST. They're still they're putting in commission rate plus GST. Like, there's so many discrepancies that they're actually doing. And then when they go to put it in their software, it's incorrect because they don't understand GST.
Yeah.
So it's still something that's still happening, even though they're trying to make the forms a little bit easier.
Yeah. Oh, look, to me, if they note it's plus GST and that's what they've put on their system, I'm happy with that. At least it's not split into 2 anymore, where you had to have, like, the property management fee was separate from the commission.
Yep.
And the commission, I think, was capped at 5% at that stage.
Yes,
and then you could charge whatever you want for the property management. And whereas now you can charge whatever you want, but obviously people are going to go with market rates and it's competitive.
Yes.
So you have to, obviously can't just charge what you want.
Well, you can.
You can, but you won't have very many owners.
You can, you just got to be able to sell it. So it's totally different.
I said how fabulous you are if you're going to charge 20%. But yeah, it's still around that kind of mark.
Yeah.
But yeah, and it's easier because you're only dealing with one figure. Whereas back in the day, you had these two that you're trying to navigate and trying to put in 1 plus GST, 1 ex GST. And yeah, it just was a minefield.
It really was.
We had really fun times. And then they brought in the new Form 6 and like, yeah, that was much better.
Oh, I still think they need a bit refining. But anyways, look, Betsy, thank you so much for coming on the show, because I think you and I can talk about trust account and everything that we actually see, because you audit trust accounts, I audit rent rolls, and it's just like there's so much similarities in what we actually do.
Yeah.
But I'm going to put all of your details in the caption. And for anybody listening today who wants to reach out, Hall Chadwick is national.
Chadwich Queensland,
so they can basically assist in any audits that you require for your trust accounts.
Absolutely. Or general trusts, or general like audits, whatever. We facilitate for everybody. So yeah, Hall Chadwich Queensland.
Thank you very much for coming on the show.
You're welcome. Thank you for having me.